So let's get into it. What happened on the trading day? Let's break it down, how we got our daily bias, and most importantly, the most important aspect of trading, which is not actually taking the trade, however, not trading. We will talk about that because I don't feel like it gets talked about enough within the industry, and I feel like we do not emphasize it enough when actually going in and trading ourselves. So, starting on the daily time frame, what happened? Well, we learned from our mistake yesterday. What was our mistake yesterday? Well, our mistake yesterday was having balanced arguments. Each side of price action had a balanced amount of arguments. We had 6 bullish arguments yesterday and 6 bearish arguments, resulting into what? A 50-50 bias. We don't want that. When reflecting, I realized we made the mistake of not having a higher probable side than the other. Today, you can clearly see we learned from our simple mistake, made sure we had more arguments on one side than the other. What did we have for bullish arguments? Well, we swept out the previous candle low right here, both this one and this one. Rejection off of a 4-hour PD array, bearish daily PD array acting as a magnet for price action to draw toward. We are currently within macro daily equilibrium. If we measure it out, bam, bam, the invalidation of bearish PD arrays on the lower time frame, a sharp turn model on the lower time frame, and formation and validation of bullish PD arrays. Now, going on to the bearish arguments, what did we have for bearish arguments? Well, we only had 4. We had 4-hour closing within a bullish PD array. Previous day, strong liquidation. You could see that right here. Strong hourly displacement to the downside, and invalidation of bullish 1-hour PD arrays. You can clearly see we have higher probability looking to be bullish rather than bearish due to how many arguments we have. The bullish side today wins the arguments. So this is our most probable trade bias. Going on to the 4-hour time frame, just to showcase how we got our full bullish bias, had this 4-hour PD array that we retraced into yesterday, seen a bullish push off of it, we made a re-retracement back into it, and you can clearly see right here on the 4-hour time frame, this is a very, very clear liquidity sweep. Right here, came down, swept out liquidity, and rejected off of this PD array, showcasing it's still being validated, us holding that bullish bias. Going on the hourly time frame, it only gets more clear. Yes, we did have some bearish confluence due to invalidating these 2 hourly PD arrays. However, the most important thing was the sweep. The sweep is what allowed us to develop and create our bias, understanding how we would target the narrative right here, the daily PD array, the daily fair value gap acting as a magnet for price action. Going on the 15-minute time frame, what happened? Price action came down, swept out liquidity, made that push back to the upside. We ended up forming a small fair value gap I wanted to see a retracement for. We did not end up getting that retracement. Even on the 5-minute time frame, right here we had our sharp turn model, invalidated this PD array, bearish on the 5-minute, and immediately flipped and formed a new bullish PD array. Ended up not getting a retracement for this. This was prior to market open. During market open, all we simply did, unfortunately, was consolidate. We made a slight push to the upside, even on the 1-minute time frame. Made a slight push to the upside. We were validating smaller micro time frame 1-minute fair value gaps, but nothing major of the sort in order for us to execute upon. Now, this is where I want to talk to you all about knowing when to not trade. You will have times where you have the perfect bias, where you understand where price action is drawing toward perfectly, and you will not get a trade entry. During those days, how do you react? Do you react in frustration? Do you instead force a trade entry in order to catch the move you were anticipating to catch? Do you put more risk on the table for a lower probable trade? How do you react during these market conditions? Because you have to remember, this is a you versus you. You cannot be bringing your outside circumstances into your trading. If you do that, you will screw everything up. If you're trying to force to pass a challenge, force to get a payout, force to quickly change your environment, and that reflects within your trading, it will do so much more harm than good. Now, you all have to understand, and I have to understand this as well. During days like this, where you understand the bias completely, you understand exactly where price action is going to draw toward, and you don't get an entry, and or you follow your rules, your playbook, and you see that price action does not correlate with your entry, and you decide to follow your rules and not execute, you are doing more work than the individual who is taking 4, 5, 6, 10 trades a day, thinking they're getting ahead when they're really not. You learning when and how to trade and what market conditions builds your discipline, builds your good habits as a trader. That is truly what makes a professional day trader a professional day trader. Being able to approach the market, understand the probabilities, understand the market conditions, and manage your risk accordingly. That also includes not putting on risk. Managing your risk also means and includes you not putting on risk within improbable market conditions. This is exactly that. Had a clear bias, clear draw on liquidity. We had everything perfect. We had our 5 fundamentals, our bias, our narrative, our context area where we wanted to look to execute. We simply didn't get our entry. And that's okay. There's nothing wrong with that. Guess what? You learn more when you don't trade. You are doing what 90% of others don't, what 95% of others don't. And that is actually learn to understand the probabilities of the market for when to trade and when to avoid the markets. And that is what in the long term will allow you to truly have success. So, don't get frustrated when you understand exactly what everything's going to happen on the trading day and you don't get a trade entry. That is okay. That will happen. Allow it to happen. Don't allow your emotion to take over. The moment you allow your emotion to take over, you ruin your trading. You destroy all the good habits you've built up to now. Don't destroy the good habits. Don't destroy the good habits. One trade is not worth the habits you've built. Remember, when you're focusing on the actual learning aspect rather than the profit aspect, you should be feeling almost emotionless to your trading. You should feel fully detached from any P&L, any profit, any losses, any drawdown. Your only focus should be on learning. Okay, I took a loss. How do I learn? How do I reflect? How do I grow? Okay, I took a win. How do I learn? How do I reflect? How do I grow? How do I increase my win rate? How do I get better? Instead of focusing how to make more profit, focus on how to get better. Focus on the core fundamentals that allow you to make more money, and you will make more money. It's as simple as that. So, just wanted to talk to you all about that. It's okay to not trade. It is definitely okay to have times where you even sit out an entire trading week. That's fine. You will get your setup. Focus on trading your setup in higher probable market conditions, especially if you're first starting off. If you're able to have a proper gauge on how you're going to execute within improbable market conditions, have that trade strategy as well. But that's all I have for you guys today. Hope you guys were able to take value from this video. If not, womp womp. I love you all, and I hope you guys have an amazing day. Peace.